Three winners. It is Thursday, April 3rd, and we're just before 1 o'clock Eastern time. And if we take a look at the markets, I think we have hit a bottom, but I don't want to be premature in saying that because we are still 3 hours out till the end of training. And I'm going to be very interested in the last 10 to 20 minutes from about 3:40 to 4 o'clock today. Be paying very close attention to what happens in the markets to see whether we get an uptick, and even from this point forward, an uptick into the close, or whether at the close, if it climbs, if we get a downtick, or an uptick. So it'll be interesting to watch. But what I've been having a look at that's been pretty beneficial is the S&P 500. And you can see it's at 54, 61, 62, somewhere in that range right now. And I've been looking at call options that would be in the money at 54.80. So I'm thinking a call option today that's about a month out to May 2nd for the S&P to get back up to 54.80, which is only 20 points, which isn't a huge jump by any means, might be a worthy purchase. And I've purchased a few of those at this point, as the market looks to be, I'm not going to say recovering at all because it's not recovering, but moving slowly in an upward trajectory. And by slowly, I mean very slowly. So what do we got going on today? So Costco is up, which is just bewildering to me. This is a company that's going to get hammered by tariffs, but maybe the thinking is they're going to be able to pass them on to their customers. On the flip side, Walmart's going to get hammered with tariffs, and they're down today. Lulu is getting absolutely crushed. Their business model sadly did not work. The diversification out of China, which was something that I think previous administrations favored, even maybe the previous Trump administration was in favor of, to reduce their dependency on Chinese manufacturing. They followed that guidance and they played that game, and they've now been bit hard by that, with tariffs on Vietnamese and other Asian countries. We scroll down further, healthcare looks to be relatively unscathed here, but that big nail in the coffin, no pun intended, could be coming, because we will probably see healthcare get cut, even though the president has said he's not going to do it. You really can't trust a word out of that man's mouth at this point. So let's just take that day by day. We've got Vistra down almost $18. This is a utility. For a utility to be off 13.6% in a day is very, very strange. Con Ed, on the other hand, is up $2.77 as a utility. So very different there in that utility landscape. Crude refining stocks have gotten slammed because crude futures for May 25th dropped $5.13 today. They're down at $66.58. That is the lowest they have been in more than a year. Then we go into technology. Technology, for the most part, is just getting clobbered as well. So the one thing you might want to consider with technology, instead of a bet on an individual stock, I would look at maybe buying a call option on the QQQ, which is an ETF that is a collection of technology stocks on the Nasdaq, and maybe at 460 in a month expiry, I think it'll be back up to 460. You could probably look at a couple of call options on that, and those would likely come into the money for you as we got closer to May 2nd and we started to see earnings out of some of these companies. The other sector that I am still fairly bullish on, and bullish is a tough word these days, optimistic might be a better word, is the finance sector. And I think Apollo dropping almost $16 here to 125.78. I bought some call options on this, thinking that it would go to 130 by May 2nd. And then on JP Morgan, as well as Morgan Stanley and Goldman. Actually, when it was down at 107, I bought some call options at 109, expiring April 17th. And those are now in the money. So I've gotten a profit on that of about 20% already today. And then I bought some Goldman options as well when it was down a little bit lower than it is right now. So that's where we are today. Be cautious with your investments, be guarded with your capital, and try to be as risk averse as possible. Leveraging put and call options will allow you to potentially make some very significant percentage gains with minimal capital exposure, minimal dollar exposure. So that would be the guidance that I would share with you if you're looking for a strategy these days in these turbulent markets. Good luck in your trades. And if you're liking the videos, please hit the like and subscribe button.